Hey everyone, so in this video I'm going to be showing you guys how to use the SMA technical indicator. So without further ado, let's go ahead and get started. In case you guys are wondering what platform I'm using, I'm going to be using the Thinkorswim platform, which is by TD Ameritrade, but you can go ahead and use any platform as this technical indicator will work the same. So first and foremost, in order to add this SMA, we're going to go to study and then edit study. Here on the search bar, all you do is simply search up a simple moving average. It is going to be the second option as we see here. So once you double click it, we do see here you can go ahead and adjust it. For the first example, we are going to be looking at a 20-day moving average. So as we can see here, we have added a 20-day moving average. So first of all, how is this calculated? So all a simple moving average does is take the arithmetic average of a chosen period. In this example, we chose a 20-day period. So what this is going to do is get the average of the past 20 closing prices of whatever stock, commodity, ETF, or forex which you're trading, and do it in a smooth line. So what it does is smooth out all of this volatility and give you a better sense of where the price trend is, how it's moving, and where it's headed towards. So as we can see here, it does smooth out all the volatility and does make it a little bit easier to see the price trend of the asset. There are a few general rules. Generally, a rising SMA indicates an uptrend and a declining SMA indicates a downtrend. And likewise, a change from a rising to a declining market is actually signaled whenever the stock price moves under the SMA line, as we see here, and vice versa, which means that a bullish signal is triggered when the price rallies above the SMA, as we can see around here. So what is an SMA line good for? So one of the things that it's good for is to help with identifying trends and confirming reversals. So now we're going to go ahead and look at another stock, and we're going to be looking at Goldman Sachs. So here we have Goldman Sachs. We're going to go ahead and change this simple moving average from a 20-day to a 10-day. So all you got to do is go to edit studies, go to the tab, and just go ahead and put the time period which you want to display. And for this example, we're going to be using 10. And we can see that it is confirmed up here where it's a simple moving average and it says 10. So going into this stock, we're going to see another thing. So another great thing about the SMA is that it serves as dynamic support and resistance levels. So as we can see here with Goldman Sachs, starting around June 6th, we do see that this SMA line is actually used as a support level throughout this uptrend here, as it does keep testing this support line multiple times before it does head into a trend reversal around July 31st. It does serve as a very good support and resistance line dynamically. So now we're going to go ahead and add another SMA line to give you guys a better idea of how different they are within the different time frames. So if we go to edit studies, all we got to do is add another SMA line, but this time we're going to make this a 200-day moving average. And we're going to put the 200-day moving average a different color, and this color is going to be red. As we can see here, the red line indicates a 200-day simple moving average and the blue one indicates a 10-day moving average. So the time frame of the simple moving average does matter due to the fact that a longer line such as the 200 SMA is going to have less volatility and is going to be a smoother line over time, as it will take longer to react to price changes. And on the other hand, a simple moving average such as the 10-day moving average is going to be a lot more volatile, as it is going to react to price changes very quickly. So as we can zoom in, we do see a bit more detail of how this line, the 200-day, does compare with the 10-day moving average. So some common time frames are the 200 SMA, which is this red line for establishing long-term trends, a 50 SMA, which is used to establish an intermediate trend, and a 10 SMA for short-term traders. And these all change between investors as they all have their personal preference of the SMA line to choose. One thing to always know is that the SMA is just a technical indicator and should not be used solely for entry and exit points, and should be used along with other indicators in order to finalize your judgment of when to buy and sell a certain stock, commodity, ETF, or foreign exchange, or anything which you're trading. So if you guys gain value from this content, go ahead and click the like button and also subscribe for more similar content like this. If you guys have any questions, go ahead and let me know down in the comments, or if you guys want to see more of these technical indicator videos, go ahead and let me know as well. Once again, thank you guys for watching and God bless you all. I'll see you in the next video.